On Wednesday, I looked at my portfolio and everything looked overvalued. There was nothing to buy. And then on Thursday, two of the companies I own crashed by over 20% after earnings, and I invested in both of them. Let's talk about the first one, Celsius. This is the least interesting of the two, but it is the one that I own the most compared to the second one. Celsius is around 8% of my portfolio, and I have been buying since late 2024. So it's a company I have been holding for around 1.5 years. Of course, last year the stock price went up by a lot. I had profits of over 140%, and now I'm losing money on Celsius. I don't really regret not selling because it is a long-term investment that I'm making. I believe that Celsius is a long-term compounder, but there are many challenges for the company in the short term. There is something interesting that was mentioned in the last earning calls, which I believe the management did not go into much details before, and that is international expansion. Before, the company wanted to focus only on the US, but now they are thinking that maybe in 5 years, around 50% of the revenues of the company is going to be outside the United States. This is the first time that Celsius has a goal of achieving this. But can they achieve 15% of revenues outside the US? Let's just make a simple calculation. In the US, they have 20% of market share. In Sweden, which is the first country that they entered outside the US in 2009, they have around 15% of market share. And that's only Celsius without Alani Nu. And now with the Pepsi distribution system, there are many more countries where Celsius overall can go deeper, can expand further and get more of market share. Even in Canada, they are the fourth largest player. In the US, they are third. There is the possibility that in Canada, they expand, they become third. And there are hundreds of countries left for them to enter when they are saying 15% of revenues. We also need to consider how much they have grown in the past, and looking at international growth, it's around 29% a year. If let's say they have to reach 15% of revenues, and assuming that US growth doesn't grow at all, they would need to grow at around 33% a year internationally. But of course, we believe that US growth too will continue, and it implies that the international growth will need to be even bigger than that. And I believe they can do that with the Pepsi distribution system behind them. Alone, it was just Celsius. Now it is 2, even 3 brands if we include drugstore, but it's not international. So Alani Nu and Celsius expanding. More and more people are consuming caffeine. More and more people want healthier options. This is an expanding market and so many countries for them to enter. Most of the value that can be created in the future for Celsius, I believe, is international. Of course, US, they are having issues. I'm not going to say there are no issues at all. There are issues in the US, and I hope they are able to manage this successfully. There are so many things happening with the company, with the integration with Pepsi, the acquisition of Alani Nu, and over the long term, I hope, I'm investing, I don't know, nobody knows 100% when you're making an investment. I hope that things are going to stabilize and the growth in the US itself is going to be something more reasonable compared to what we had last quarter. But it's not just a growth story, it's also about margins, because with the Pepsi integration, with the expansion, it doesn't cost much more to make 100 cans compared to make 10 cans. If you have the factories working, more or less your costs are going to be distributed amongst the higher volume. So if Celsius can expand in more countries, it can expand in the US itself. It means that over the long term, margins of the company are going to improve. And it is a company repurchasing shares. They don't need much capital to grow. Celsius has risk. It is not as low risk as compared to Wise. And that's why it's not 20%, it's not 30% of my portfolio. But still a company I believe that is going to compound long term, and right now it is massively undervalued. Before we talk about the second company, let me tell you that next week I'm doing the first quarterly investment call. So I'm going to talk about how my portfolio has been doing, the changes I have been doing. It's not really about the performance of the portfolio. It's more about what I have done in the past quarter. And also, I'm going to talk about a specific company. I'm not sure which one yet, but it is free for you to join. Anyone can join, but you have to register in order to attend. So it's next Wednesday. The second company I'm buying is Root. This one is riskier compared to Celsius, but the potential reward is much bigger. Root also, just like searches, they are not growing as much as the market was expecting them to. And it is on purpose. The company decided to work on profitability this quarter rather than growth. When it comes to auto insurance, it is a very competitive space. Everyone is not just competing, they are competing on customer acquisition. They are paying so much money just to acquire the customer on ads. And Root has decided to take a counter-cyclical route. Instead of fighting for ad space, they don't do this when everyone is fighting. They stay behind. They focus on profitability, and then in the future, when everyone is not spending that much anymore on ads, then they are going to spend. It is something that Geico did in the past, and also National Indemnity, and that's why many people did not like Berkshire Hathaway early in the history. Why they bought an insurance company that is on purpose deciding not to grow when everyone else is growing. It's being counter-cyclical, and I like that about Root. But there are also many other things about Root to like, and it's the technology of the company. The telematics is so much better. They have embedded insurance, which is something growing much more rapidly. They have these partnerships now, Carvana, Hyundai, and Toyota, all these partnerships of embedded insurance. All these are growth potential beyond the just normal business of selling insurance directly to customer. Root also is only in 37 states, so they have the geographic expansion that is possible. All these things are catalysts for the growth of the company. Even though they are not growing today, the management has said that in the past, they had doubled the size of the company in a year. They have done this multiple years. So there are going to be years when the company will not grow and years when they will grow. And you need to be investing in the company when they are not growing. Even if we assume, let's say, Root is going to grow only 10% annually, the market share of the company will go from 0.40% to 0.53%, which is reasonable. 10% growth with such a fragmented market is very reasonable. They are getting only 11 basis points of market share, which is not much. And even at 10% growth, I believe Root is undervalued. Now, of course, if you say that next year maybe they are going to double volume again, hopefully, then they are very massively undervalued. And there are other things that is coming. I'm not going to talk about that in today's video. That's for another day. There are assets off balance sheet, which the market is not considering. They have lost so much money over the years that they have deferred tax assets, but it is off balance sheet. And probably soon they will put that on the balance sheet. You may say that this is non-cash, but if you can defer taxes and not pay taxes in cash, that's a good thing. And being an insurance company, it has on capitalization. You can grow your business more if you have a better equity capitalization. So these are the two stocks I'm currently buying, Celsius and Root. Root is the most recent addition to my portfolio. Last year, I bought only one stock, that is dLocal. So I'm not someone who buys stocks that often anymore. dLocal is the only stock that is going to report earnings next, and then we can have the whole first investment call. I would recommend you watch the video about dLocal. Have a nice day and goodbye.